What's going on? My name's Dillon. Welcome back to the channel. And yes, I'm uploading a new video to this channel after some time off of YouTube. However, don't want to get into that today. What I do want to get into is where we left off last time, and that is the MetaTrader 5 series. And today we're going to be talking about position sizing. So I'm going to go through what I've been up to and all of that in another video. Today I want to go through this, and I want to go through some of the changes as well that I have made in just a bit. However, let's get started. So what are we going to be doing today? Well, we are going to be adding in the ATR indicator into our expert advisor, of course, on MetaTrader 5. Again, if you haven't watched those previous videos, then I do recommend watching those because then you'll be able to get up to speed to where we're up to today. So with the ATR indicator, we're going to be able to calculate our stop loss and take profit based off the ATR. And this is what is called a volatility adjusted type of money management system. From there, with our stop loss, we can then calculate our position size. And of course, we're going to be adding in inputs so that the user can, of course, adjust their inputs based on their risk tolerance. So what is the ATR stop loss? Well, if you're coming from No Nonsense Forex, which most of you are, then you would of course know this. However, for those that might not know what a volatility adjusted money management system is using the ATR indicator, well, this is just the brief 30-second run through of what it is. So basically, if there's high volatility, well, we want to account for that volatility, that high volatility. So of course, with high volatility, we need to actually increase our stop loss and make our stop loss much wider or bigger. Now, the opposite, of course, when we do have low volatility, then we want to have a tighter stop loss. So this is where we're taking the volatility of the market into consideration. So what does that mean for our stop loss? Well, when we have higher volatility, because we've got a much larger stop loss, well, we're going to be trading a smaller lot size. And then the opposite, if we've got a smaller stop loss or a tighter stop loss, well, we can trade a bigger lot size. The beauty of this is that we are not actually increasing our dollar risk per trade. That is important. So we're risking the same amount in terms of dollars. However, we're adjusting the size of our, of course, lot size or position size based on the stop loss position or the volatility of the market. So this is the basic calculations. Of course, most of you should know this. I'm not going to go through this in detail. However, we are going to go through it in a little bit of detail, of course, in the code. And I think a little bit of it is already coded in where we left off last time anyway. Now, position size, this is what we have encoded up in our expert advisor, and this is what we're going to be doing today. Again, I'm not going to go through this in a lot of detail. However, this is, common throughout, of course, trading. So our risk amount is our equity of the account times by our maximum loss in terms of percent. So for example, we might be trading 2% risk each trade of 2% of the equity within the account each trade. Our distance of our stop loss from our price is, of course, the entry price minus the stop loss. So that's how wide our stop loss is. So then our lot size is just the risk amount divided by the distance. Now, there's a couple of things that we need to take into consideration. One, are we using a compound or a fixed money management type of methodology? Now, we are going to take that into consideration in the code as a input variable. Now, I'm not going to go through this, what the differences are. However, I have made a couple of videos in terms of what the differences are between compounding and fixed previous. So I do recommend going and watching those. I will leave a link in the description for you to go check those ones out. But what's important is that we understand the difference between the two, because the way we are going to test our expert advisor will depend on whether we're using compound or fixed methodology. Now, the other thing to take into consideration, of course, particularly if you're trading Forex, and if you're coming from Forex, you would know this, is that we have to, of course, adjust for different currencies that we are trading that are outside our base currency. Again, that's not shown in the calculation here. We, of course, are going to be coding that within our expert advisor, but that's, of course, something that you'll need to take into consideration. Now, I'm not going to go through much of the code in a lot of detail. If you do want to go watch a little bit more a detailed version, then I do recommend watching the resource shown here. But of course, I'll leave a link in the description from Orchard Trading. This is where I got a lot of the information for this video and for my expert advisors on, particularly around coding for lot size and stop loss positions. Now, again, we are using the ATR, but if you want to use a different type of money management, then I recommend actually watching this one if you do want to go and have a look at that. So that's, of course, it of the slideshow. Now, there's one thing that I do want to, of course, talk about, and that is some of the changes that we have made. Now, the first one is actually I have a GitHub. So let me move my face here. So the GitHub is where I'm actually going to be sharing with you all the codes for all of the videos from the past and of course moving forward in the future. All of those codes are going to be given to you for free in this GitHub repository. So I do recommend going and giving that a follow. And I also recommend, of course, following that one and staying up to date and actually keeping your eye out here, because I am going to be sharing some of my codes within the GitHub that I might not necessarily share within the YouTube videos. So of course, feel free to go into that. And that is what I have been doing a little bit in the background as of late, so that way I can share all of my content, of course, not only on YouTube, but also on the GitHub. So that way you can, of course, use the resources that I do provide, but also compare and troubleshoot your codes, of course, that you might be developing. I do recommend, again, of course, following along with these videos, because that's where you actually learn how to code and understand in a lot of detail, of course, what we're doing. Of course, if you just jump the gun and then go into here, well, then you're not learning much. So this is here for you to use if you wish. Again, I do recommend watching the videos, of course, and then going in here if you like to, and going into the GitHub. So this is the MetaTrader 5 GitHub. If you go to my actual GitHub, I've also got the trading view strategies over here. That hasn't been updated yet. I will be updating that shortly. However, the MetaTrader 5 series, I want to get that one out and up and running, because of course that's a series that we are doing today. So all you need to do is actually go to this code and then just download the zip, and then you'll have the most recent so far. And of course, staying up to date, I will be uploading not only this strategy but other strategies in the future into this GitHub repository, so that you can of course follow along. So that is the GitHub. The other change that we will be making is, and this is not necessary for you to follow, but I will be using Visual Studio Code, which is what we see over here, to actually code our expert advisors, because Visual Studio Code actually has MetaTrader language built into it. So Visual Studio Code, all you need to do is just Google that and download it, and you can actually code through Visual Studio Code, and then that links to, of course, the meta editor, which we then can compile and then use our expert advisor in the actual MetaTrader. So that's why you'll see me using this now, which the beauty of it is it's got nice colors and it's very easy to read. And I've, with the liberty of this, have actually coded or gone back in time and actually tidied up a lot of the code that we do see, so that moving forward it's a little bit neater for us. So this is all, again, available in my GitHub. So if you want to, of course, go to that and download the most recent version, that's great. You can of course do that, and then you can follow along here. So today we're going to be coding up version 5, and that is of course taking into consideration money management. All right, so let's get into the coding then. So the first thing that I want to do, and we mentioned this of course, is add in the ATR. Now, just like any other indicator that we have added, like the MACD or the EMA, it's much of the same process. So we should be very familiar with that. Now, the first thing we want to do, of course, is add in the ATR handles. So we're going to add in the ATR handle and of course the variable, and let's put that over here. Now, of course, this is very standard ATR, that should be handle, ATR handle and variables. So we've got the ATR handle and the ATR period, and we're going to be using the default period, which is commonly 14. Again, you can change that if you like to. A lot of people change that to 10 because, of course, Forex markets, well, if you are trading Forex, Forex markets are only open 5 days a week. So some people put in 10 because it makes a little bit more sense. Now, the next step of the process that we normally do is, of course, initiate the variable. Initiate the indicator, and that is what we're going to be doing here. So what we've got here is we've set up the handle for the ATR indicator on the initialization of the expert. So we've just got the handle ATR equals IATR. Again, this is already the IATR function is already within MetaTrader, and then we're just putting in the ATR period, which is of course the variable we declared up here. Now the next thing, of course, we need to de-initialize it, so we can do the same thing. And once you do this a few times, you'll understand the process, of course, of doing this. So we set up the global variables, initiate it, initiate it, and then we can actually go into the onTick function. Now, what we want to do is add in our money management for our ATR, and we want to do that around the same time where our other indicators are running. So of course, if you've been following along, you would know that we have this, every time a tick's received, of course, this onTick function will run. And then if there is a new candle, we have this if is new candle equals true. Well, this will be the appropriate time to, of course, add in the ATR check. So over here, of course, we've got our MACD and our EMA. We want to be doing much of the same, and we want to be adding in, let's say, money management ATR. So we're going to be adding in the ATR. Now I'm going to copy this again, copy this across, and then we'll go through it. So of course we've declared a new variable, which is called the current ATR, and this will be calling a function called get ATR value. Now this is a custom function that we of course will have to put in. Then once that custom function runs, which is essentially going to get the ATR value, that's going to be putting it into that string concatenate that of course we made last time, which has the variable called indicator metric. So every time that this new is candle, so there is a new candle, every time that runs, this of course is going to run, refresh, and then get the new ATR or get the current ATR value. So that's of course what we need to do. We need to add in that custom function. So if we go to our custom functions here, we've of course got the custom function for the MACD. Going to make some room for it, and we're going to call this to get ATR. Now this is not a signal, this is a value. Now that's very important because what we want to be doing is getting the ATR value. And let's put that there. Oops, no, that's not right. There we go. So get ATR value. Now this is going to be returning, let's put this, the ATR, and we'll just take this step-by-step similar process to what we've done before. So the first thing that we need to do is of course set up some variables. So that of course similar to what we have down here for our MACD, same process. From here we can of course populate, similar to what we've got over here, populate the ATR. Let me space this out. So just populate the ATR buffer with the values that are from the ATR handle. And of course, we just have a simple if statement over here. So if it returns an error, then of course we just return 0. And that's just some error handling. The next thing that we want to be doing is then adding in, oops, what have I done? Adding in the just a new variable, which is the current ATR, and the current ATR equals the normalized double of just the ATR at its current location. Now again, remember that we are capturing with the buffer, we are capturing 3 values, and that is 0, 1, and 2. Now down here we've actually, I might copy this across because it's a bit better. We've actually declared how many candles that we are going to be using, so we might do the same here. Just looking at this now. Required candles. That's good. And then insert the 3 required candles over here. And that looks, and start candle. I've also got that. Just for consistency. That looks a bit nicer. Start candle 0. So it's essentially the same thing, but I'm just declaring them as variables just for consistency to what we're using down over here. Indicator buffers. Y candle. Bear with me. That's a little bit nicer. I will have to update the GitHub now with this newer version, but what we have here is a similar layout to what we have down the bottom. So we have the current symbol, the start, and then the required candles, and then we've got the indicator variables and the buffer. So we're declaring the index ATR, and we also got here the buffer ATR or the array initialization. Again, this is this here. Same. Cool. Let's remove that. What's really good is that when it comes to coding, hopefully having the same conventions makes everything much, much neater. And we've got the same thing down here. Good. So that looks all good. Now, the last thing we want to do is just return. So then we've got ATR value, return ATR value, return current ATR. Do I have? I don't like how it's capitals. Return current ATR. Perfect. Now that is that code. Now notice here as well that we are using double get ATR value. So we're declaring this function as a double type function. And that is different to this string function, which is get MACD signal, because the MACD signal is returning whether it's long, short, or no trade. Note that this is actually returning the actual ATR value, which is a double value, of course, because we're going to be using that double value to actually calculate our stop loss and take profit, and then of course our position size. So that needs to be a double value. So let's save this. I think that's everything we need for this first part. And let's go into our MetaEditor. Now I've got the file open in MetaEditor. Again, of course, this is the native, I guess, where you would code your MetaTrader, of course, expert advisors. This is what we've been doing in the past. However, I do like Visual Studio a little bit better. You don't have to use Visual Studio. You can, of course, do this. However, we'll be using Visual Studio and just swapping between the two. Now, the reason why I'm back on here is that I want to, although I've saved it on the Visual Studio, going blank, I do want to check that the actual expert advisor compiles properly within MetaEditor. So I've compiled it. I've got a warning, missing a semicolon. That's here. Compile. Good. Now the beauty of this is if I save it in one, then it will actually carry across to the other. So let's go back over here, and then notice here that I've got the semicolon over here as well. So that wasn't there before because that's why I was getting the error. So if I go back now, I compile it again. That works. That's good. So it's all working. So let's go back to Visual Studio and let's do our next step. And our next step is going to actually be updating our expert advisor so that it actually takes into consideration our stop loss and take profit values. Now, the first thing that I actually want to do is actually put in some additional risk metrics before we actually go into it. So let's do that again at the start where our global variables are. Risk metrics, and then let's put in the ATR multiple. So back in the, and I did skip over this actually, but I might pop back into it. So back into our PowerPoint, which is this one here, what we've got here is this. So our stop loss and take profit is going to be, and let's just go for the longs. Our stop loss is equal to our price minus the ATR times by some ATR multiple value. Now, coming from No Nonsense Forex, an ATR multiple could be 1.5 times the ATR, and that's where you would put your stop loss. And then your take profit, again, take profit in No Nonsense Forex is a half profit at 1 times ATR. But if you wanted to be trading risk to reward ratios, then you can, of course, have a take profit of either 1.5 or more. So then you've got that 1-to-1 risk to reward ratio. Again, No Nonsense Forex is not like that, but I just wanted to mention it here. We have the option for a stop loss and a take profit multiple value. So they're two separate variables. So back in the code, that's what I want to put in over here. And I want to put in two variable options. Now, the first variable is our ATR profit multiple, and then our next one is our ATR loss multiple. So from here, what we can do, of course, is go into our code and actually change the stop loss and take profit values that we have put in last time. Now, last time we have, if we go to our code over here, right at the bottom, we've got here our process trades open. Now, in this code that we done last time, we've just got here price minus some random value that we've put in, and then for our take profit, price plus some random value that we put in. Now what we want to be doing is actually putting in the ATR times that ATR multiple value. So the first thing that we need to do is actually put in, of course, the ATR. Now the ATR isn't actually being read into this custom function. What we have to do is actually put the ATR in this custom function, and the way we do that is feeding that ATR variable in. So in this function, we've got here a Boolean type, and it's called process trades open. And what it's feeding in, or what's feeding into it, is this order type. So that's whether it's long or short. The next thing that we want to be doing is, of course, feeding in the ATR. So we've got double, and we're going to be calling it current ATR. So if I go back to the where this variable is actually being declared, current ATR, I need to, of course, feed that current ATR in. So we're kind of working a little bit backwards here. But we've got here process trades open. So every time a trade is entered, we've got here process trades open, and this is feeding in order type buy, but we also want to be feeding in current ATR. And I don't like this, current ATR is in caps. Let me change that, sorry. Current ATR, and that's the other one. So current ATR, get value. So once that get value function, of course, runs, then current ATR is going to equal whatever the ATR is. And we're going to be feeding that into our process trades open. And that's going to be feeding in current ATR and current ATR. Let's save that. Perfect. And now let's just go back to MetaTrader, compile, and that's still compiled. That's good. Awesome. So if I go back down here to our trade, so we're actually feeding in the current ATR to this function. And now, of course, all we need to do is change this. So we've got our stop loss, which of course equals current ATR, and then times by ATR loss multiple. And this is going to be the same for this one down here. And then the next one, current ATR times by ATR profit multiple. And that's going to be the same for that one. Awesome. So this is actually how we factor in the ATR. Save that. And then just double check in here, compile. Great, that's all working. So that's all compiled. So now we've actually got an expert advisor that takes into consideration the ATR stop, or the ATR for its stop loss and take profit. Now, the last thing we want to do is, of course, put in position sizing, because what we got over here is that when we get the lot size, when this position process trades open actually runs, our lot size is just a lot size of 1, and of course we don't want to be trading that. We want to take into consideration where our stop loss is using the formulas that we have been using before. So all we need to do is add in a new function, and we're going to call this function optimal lot size. So optimal lot size, so lot size will equal this function called optimal lot size, and what we're going to be feeding in is the current symbol, the price, and the stop loss price. Now note, of course, we don't need the take profit price when calculating lot size. It's all based off the stop loss price. So we're getting the price, and that's the price that we entered at, and then the stop loss price, of course. So of course, we're going to be needing a new function. And that's our new function here. Now, again, I've just linked Orchard Forex, that YouTube video that we saw, and I've just credited that because I do recommend that. It is a very good video for all of you to go watch. So the first thing that I want to do before we actually get into this is actually just enter in some additional items at the top. Again, some global variables, and we're going to be entering in the following. Now, what we've got here, under risk metrics, we have the following, which I've just highlighted. Now, the first one is whether we're going to be compounding our risk, so our risk methodology, whether we're going to be doing compounding or fixed. And at the moment, it's just, well, all it needs to be is a Boolean. So whether we are compounding, if we're not compounding, which this indicates that it is false, then we are just using a fixed methodology. So are we compounding risk? The next thing is we have a double, which is starting equity, current equity, risk, and then current equity within the account. The next thing is our maximum loss in terms of percentage. So that's our risk per trade. And this is set at 0.02 or 2%. Now notice here that this is an input variable, much like this one over here, which is risk compounding, so that the user can of course adjust not only their risk per trade, but also their risk methodology. And notice here that of course the ATR profit and loss is also an input variable that the user can of course use. So with those variables in there, what we want to do is before we actually get into the function, what we want to do is that on the initialization of the expert advisor, we just want to check whether we are using a fixed or a compounding money management. Now, the reason for that is for a fixed money management, what we will be doing is taking the starting equity of the account, timesing that by, of course, the risk per trade, in terms of percent, and that's going to be giving us our dollar risk every time we take a trade. Now, if our equity goes up or goes down over the course of time, a fixed money management doesn't take into consideration that, and it doesn't compound any profits or, of course, losses. It only takes into consideration the starting equity of the account, and that's where on the initialization of the expert advisor, we need to run this function once, so that way we can get the actual account equity within the expert advisor, and then timesing that by the risk, and that's going to give us our risk per trade. So what we're going to be doing is on the init function, we are going to be just running this little piece of code once. And all this does is it stores the starting equity of the account. So starting equity equals this over here. So the next thing we want to be doing is going to our actual new function, which is down at the bottom. So the next thing, of course, is we're going to be running this optimal lot size calculation. And what we're going to be doing is we'll just take this step by step. I just want to make sure. Let's do this. So we're going to declare some variables at the start. We're just going to go through them just a couple of lines at a time. So the first thing we're going to be doing is getting the tick size and then the tick value. Now this is important, and again, watch Forex if you want a bit more detail, but this is important because we need to take into consideration, of course, the different currency pairs that we might be trading that are outside of our base currency. So the tick size and the tick value is going to take into consideration that. Now, we will know that for one of the pairs, which is the yen, the yen takes a tick value of course, well, something different compared to all the other currencies that are within, well, the Forex space. The yen is something that is relatively different compared to the others, and that's because it's tick value. So if we find that we are trading the yen, and this is a good way to actually find that, that we actually see how many digits there are within the currency that we are trading. If the digits are less than or equal to 3, then this indicates that we are going to be trading a yen pair, and so we want to divide the tick value by 100. Now, you don't have to do that for every other pair because, of course, every other pair has the same tick value, but the yen is just a unique case, and this takes into consideration that. Now, the next few things that we want to do is just declare a couple of other variables, and that's the point amount, the ticks per point, and then the point value again. All of this here is going to make sure that we are taking into consideration the appropriate risk per trade in terms of dollars from your base currency. Again, this is something in Forex we need to consider. If you're not trading Forex or you're just trading currencies from your base currency other than the yen, then you should be fine. But saying that, it's always good to just put that in, put this code in here just to be safe. Now, the next thing that we want to be doing is just calculating whether or what our risk per trade is based on whether we are using a fixed or a compound methodology. Now, that's what I've got in here. So the first thing is calculating our risk based off our entry and our stop loss. So this is just calculating our risk per point. And this is, of course, just the entry price minus the stop loss. Again, that is just the distance of how much we have before we actually get stopped out. And then we can divide that by the tick size. And that, again, takes into consideration trading different currency pairs. Now, the next thing, sorry, I missed that part, but the next thing now is actually defining our risk model, whether we're trading fixed or compounding. And then from there, what we want to be doing is, of course, putting in the appropriate money management type of system. So if risk compounding equals true, again, that's that Boolean that we have, that input function at the very start as a global variable. If we are taking risk compounding, then we want our current equity risk to equal the equity in the account, which is currently, and then our current equity to equal the current equity within the account. If it's not, then our current equity risk equals our starting equity, and then our current equity equals just the equity in the account. So note the two differences, or note the differences between the two over here. Now, from here, we can, of course, start to do some calculations, and that is to actually calculate our total risk. So our total risk equals the current equity within the account, or sorry, the current equity risk times by the maximum loss. And again, current equity risk depends on whether we are compounding or not compounding over here based off this variable. And then from here, what we can do is actually put in some print functions. Oh, sorry. What we can do is, of course, calculate our lot size first. That, of course, is important. So our lot size equals the risk lot equals the risk amount. And that risk amount is this value over here that we just calculated. Again, going back to that same calculation that we showed in the PowerPoint, times it by the risk points, which is what we calculated over here, which is essentially our stop loss distance, but it takes into account the point value, and our stop loss distance, of course, takes into account the risk size. So all of those things are taken into consideration, the differences in base currency, if there is any differences. Now, the last thing, or the second last thing that we want to do is, of course, just return what our lot size is. So we just return risk in terms of lots. And then the second last thing we actually want to do before we return is actually put in this print function. Now, this print function just prints the values, of course, that we were just talking about, and just prints it in the journal just for some testing purposes, or just for some journaling purposes, I should say, so that way we can make sure that the expert advisor is working properly. Let me change this. And that is it for the code. So let me save that. That's saved. And now let's go back to MetaEditor. Let's compile what we've got here. How did that get there? That shouldn't be there. Compile, good. Go back to Visual Studio, make sure that's also gone. See, there was a full stop there for whatever reason. Cool, so that's compiled, that's good. And now what we can do is actually test if the code is working. So compiled again, that's good. So let's go into our actual MetaTrader. So in our demo account, I've got here that same strategy. So this is just the MACD strategy working file that we've got here. Again, this was named something different in the previous videos. However, I've just done some playing around in the background and just tidied things up. So this is going to be the working file moving forward. So with that file done, let's start this. So far so good. What do we got here? So we're not compounding risk. Our maximum loss is 2%. Our ATR multiple is 2 times the ATR, and our ATR stop loss is 1 times ATR. So we're going to take profits at 2 times ATR and stop loss at 1 times ATR. So we're trading a 2-to-1 risk to reward ratio. Now, again, that's if you want to trade ratios or not, but that's just how this function is set up. Go to trade, no trade, cross. There we go. Okay, so I was too slow, but let's have a look. So we took a trade long over here. There was a crossover and there was a short. And then that short should have been 2 times the ATR value over here. I'm not going to go through that calculation. Hopefully the take profit as well was somewhere up there too. But what we can do is go through the journal and see if everything was done correctly. So let's go to the journal and let's go back in time and see what we've got here. Now entry price was 0.696 blah blah blah, and our stop loss was over here. And risk per point, risk points is 169. The risk amount is $1,000, which is good, and our risk lots is our lot size is 6.21. So what we can do is actually do that calculation. I know. Here we go. I've got a calculator here. Brilliant. I was playing around with this, I think. Cool. So what do we got here? So our equity with the account is 50,000. Risk per trade is 2. Maximum risk, and that's a calculated field, so that's good. Hey, go away. I want this. Is good. Our entry price is 0.69679. That's good. Notice here that I think I was playing around with the same pair. And our ATR. Is there ATR on here? Take profit. Damn, our ATR doesn't print out. That's annoying. Maybe I must have got the ATR when we calculated it. So if you stop it, if you pause it properly, and oh my goodness, if you pause it properly when the candle's actually on it, you'll of course get the ATR readout, which is over here, which is 0.00142. So you'll be able to get that ATR value over here. So if you get it correctly and you do your troubleshooting, then of course you can put that ATR value here. And then of course our ATR multiple values over here. Now for longs, this was a long trade. It was. We've got here our stop loss based off this entry price. This should be the same value, 0.69518. Awesome. So this is actually reading the same value over here, which is good. Take profit isn't declared. Oh, here we go. Take profit is this one here. It's the next readout. So take profit. So stop loss is right. Take profit is right. Good. And we've got here the next deal, and that is, so that's our deal 1. So the deal 2 is of course us getting stopped out, and that's getting stopped out at 0.69679. Oh no, sorry, that was our buy. So that was our deal. Sorry, deal 2 is our buy, and we are buying at the entry price, which is of course this, order perform, blah 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 blah, and then send market buy, blah blah blah, deal done at blah blah blah. Cool. So what we've got here is our stop loss. Here we go. So deal 2, so stop loss triggered at order number 2 by blah 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 for how many lots, AUD USD. So stop loss, so it bought, this was the entry price, our stop loss was this. Go back to our Excel, 0.6915518. Good. And the take profit was, the deal done, 0.69518. Yes, so that's good. So that means our price stopped out at the appropriate price. So that's all calculating really good, which is fine. That's what we want. I'm going to assume that the profits or the longs are going to be the same as well. So that's all working fine. And what's good, of course, is when we did get stopped out, notice our equity in the account. Our equity in the account is, of course, $1,000 less. So this is going to be the basis moving forward of our future indicators, which is really good. Again, this will be all available on my GitHub, but of course, hopefully you've been following along, so that way you can code it yourself and understand exactly what we're doing. So that is it for today's video. Future videos will be up, shortly. I'll be keeping you updated, once a week, hopefully, moving forward. Anyway, with that being said, of course, stay up to date, follow the GitHub GitHub, of course, follow the YouTube channel, subscribe, like, you know, all of that. But also check me out in Discord, because I'll be popping in there quite a bit now that I'm back on track with a lot of these things. And of course, I'll be saying hello in there too. If you've got any questions, ask in the Discord or the GitHub or whatnot, and I'll attend to those, and others can attend to those too. So with that being said, I hope you enjoyed today's video. Good to be back, good to be doing these videos, and of course wrapping up, but also starting future videos on different things as well in the future. So really happy to be back, and thank you so much for your patience. So with all that being said, thank you so much for tuning in to another video. Have a great day, happy trading, and I'll see you in the next one.